Hello everyone, welcome to this price action breakdown on EU. In this video, I'll walk you through exactly what my thought process was for this week, how I built my directional buys for each day of the week. I'll be showing you the trades that I personally executed, and more importantly, I'll be showing you and explaining to you what was the actual logic behind each one of those trades. Okay, now along with all of that, I'm also going to be breaking down two extremely important lessons. Okay, now one of those lessons is going to be about the idea of what it actually means to be a day trader and how you should approach the intraday 4 hour price action flexibly without being rigid. And the other lesson is going to be about retracement profiles. Okay, what retracement profiles are, how you can identify them, or meaning how you can build the ability or have the competency to be able to know when a retracement profile is about to begin, and exactly how is that going to help you with your analysis and what is the actual significance of it. Okay, I'll be explaining all of that to you. Okay, so that is going to be the content of this video. And now let's get into the charts and let me explain all of that. First of all, obviously I'm going to start off with the weekly time frame. Okay, now on the weekly time frame, first of all, I'll explain all of this price action to you from the past 2 months. And once I've done that, then I'll narrow down my focus to just this week's price action. Okay, first of all, what you can see right here is that during the month of September, we took out this high. Okay, during the month of September, we took out this external range liquidity. And after taking out this external range liquidity, we then had a CSD and a bearish structural shift to the downside. And after having that bearish CSD from that point on for over 2 months, my primary long-term directional buys on the weekly time frame turned bearish. Okay, from that point on, after having the CSD for over 2 months, I've been holding a long-term bearish directional bias on the weekly time frame. Now, if you are wondering what was the actual thought process there that led me to believe all of this, or that led me to change my directional bias to bearish, then the answer to that is that there were four major factors and four major reasons due to which I expected and anticipated price to form or have bearish price action for the next few months. Obviously, the first factor here is that we had just taken out external range liquidity in the form of taking out this high. The second reason or the second factor here is that after taking out this high, we had a major SMT divergence with GU. What happened right here is that EU took out this high, whereas GU failed to do so, and that led to this non-symmetrical price action. And then this SMT was followed by a valid change in the state of delivery or a valid structural shift. And due to these three major factors, at that point, I believe that now we've formed this new bullish dealing range. And now for the next few months, for the time being, the primary objective for price is going to be to rebalance this dealing range and reach a discount key level in the form of this weekly CRT low. Okay, due to the formation of this new bullish dealing range and the discount key level within it, the primary objective for price became rebalancing the dealing range and taking out or reaching this discount key level. Okay, now these weren't the only three factors here. We also had another major factor which I'll just show you. If we look at this 3-month time frame, then you would see that with the end of the month of September, we closed this quarterly candle. And with the start of this new quarterly candle in October, my initial expectation for this quarterly candle was for it to have a move lower in the first half of it to first of all take out the previous quarter's candle low and fill this fair value gap and this internal range liquidity before having any major move, before having any major expansion. Okay, this was another major idea that I had on the higher time frame. And this idea was supported by the three factors on the weekly time frame. Price taking out, external edge liquidity, having this SMT divergence, and then having this valid structural shift. Okay, all of these ideas aligned with each other, and from this point on, I've been having a long-term bearish directional bias on the weekly time frame. Okay, now let me remove all of this. Let me just keep this one. Now, with that being said, here is something really important that I want to talk to you about, which is that even though throughout this time, throughout this price action, throughout the past few months, even though I had a primary long-term bearish bias on the weekly time frame, that doesn't mean that I never took any bullish trades. Even though I had a long-term bearish directional bias on the weekly time frame, that doesn't mean that I never had certain days where I had a bullish directional bias on the daily time frame. Because the reality is that despite having a weekly bearish directional bias, there were a lot of days throughout this price action, a lot of days where I had a bullish directional bias on the daily time frame, and I looked for bullish trades. I executed bullish trades on those days. And the reason I was able to make that distinction is because I understand something that a lot of traders overlook, that a lot of traders don't know about, that a lot of traders don't understand, which is that I know and I understand and I'm aware of this fact that there are layers to directional bias, which means that you might have a higher time frame bearish bias, you might have a weekly bearish directional bias, but in spite of that, there could still be days, a lot of days, on which you might have a bullish directional bias on the daily time frame because price has formed short-term drawn liquidity higher. Okay, despite having a bearish directional bias on the weekly time frame, there could still be a lot of trading days on which price forms bullish price action, price forms short-term bullish price action to fill short-term drawn liquidity higher. And on those days, you could have a bullish directional bias despite having a weekly bearish directional bias. And the key thing here is that if on those days, if you had pushed your weekly bias blindly, stubbornly, and ignored this nuance, then on those days you would have ended up on the wrong side of the markets. Okay, on those days you would have been wrong. Your directional bias would have been wrong. Okay, and obviously that's something you want to avoid. That's why you must develop this understanding and develop this awareness that there are different layers to directional bias, and there is a difference between a weekly directional bias, a monthly directional bias, and a short-term daily directional bias. Okay, there are different layers to it, and you can't just treat all of them as one. Okay, now before we get into what happened this week, before that, let me give you an important lesson on retracement profiles. Okay, now this is an important lesson which you must understand and learn if you want to stop being a one-dimensional trader, and if you want to be good at every aspect of analysis and every aspect of determining a directional bias. Okay, and by learning this example, by understanding this lesson, you'll be able to build such an understanding that you'll not only be able to distinguish between the different layers of directional bias, but you'll be also able to accurately identify the exact and the precise directional bias for your exact trading day. Okay, now let's imagine that we have this example in which the drawn liquidity is lower, okay, and the directional bias is bearish. Okay, Let's imagine in this example where the drawn liquidity is lower and the directional bias is bearish. Now, obviously, you know that price would be inclined to move lower. Okay, price would be inclined to move lower towards the long-term drawn liquidity that is right here. And in this instance, in this example, your directional bias, your long-term primary directional bias would obviously be bearish. Now, even though the primary direction for price would be lower and price will form bearish range expansions towards the long-term drawn liquidity, it will still have these retracement profiles where price temporarily forms these bullish moves higher. Okay, despite having a primary bearish bias and price being inclined towards the bearish direction, there will still be these retracements where price moves higher and has short-term bullish price action. And the primary reason price is doing that is so that it could fill the short-term drawn liquidity that has been generated higher. Okay, when a short-term drawn liquidity has been generated, price is usually first inclined to fill that short-term drawn liquidity before moving towards the long-term drawn liquidity. Okay, that's the whole logic right here. Now the key thing here is that let's say this is the weekly time frame, or let's say this is the monthly time frame. Now in that case, these retracement profiles that you can see, these short-term bullish moves higher, these retracements can literally last not just for days, but weeks. Okay, these retracement profiles could literally last for weeks despite having a long-term bearish directional bias. And if you, during these short-term moves higher, during these retracements, during this time, just like I said earlier, if you had stubbornly held on to your bearish bias and expected price to just nuke downward and expand lower immediately without giving it breathing room for these retracement profiles, then obviously you would have ended up on the wrong side of the markets. You would have been wrong. Now, I know most of you are probably wondering that, Sham, you've now taught us this important concept, but the critical thing is that how do we know when a retracement profile is about to begin? How do we know when a retracement profile or a retracement phase could start, right? So now let me show you how you can do that. Okay, so right here, here's how you can know when a retracement profile is about to begin. You're going to basically look for 4 major factors. Number 1, short-term drawn liquidity, meaning that price generates short-term drawn liquidity in the opposing direction, which basically gives you your first signal that we could potentially have a retracement profile. The second major factor is that price recently takes out ERL or external range liquidity, which also adds value to a potential retracement. The third factor or the third confluence that you can look for is an SMT divergence, meaning that price forms an SMT divergence with its correlating asset. For example, in this case, price has an SMT divergence, which along with the other factors leads to this retracement. And also similarly, we have an SMT right here in this case as well. And then once the retracement profile has been completed, we have another SMT divergence, and then from that point on, we then continue our expansion lower. The fourth major factor that you must look for is a lower time frame CSD or a lower time frame change in the state of delivery, meaning that after short-term drawn liquidity has been generated and we've taken out ERL and we've had an SMT divergence, we then must look for a lower time frame CSD. Okay, for example, let's say in this case we are looking at this price action on the lower time frame. Let's say this is the lower time frame, and right here you can see that after having the SMT divergence, our objective would be then to look for a lower time frame change in the state of delivery. And once we have that change in the state of delivery on the lower time frame, that would be our the fourth major factor, that now we could potentially have a short-term retracement profile higher. Now, along with all of these factors, the last major factor that I would add is the correct timing, meaning that all of these factors must align with each other at the correct time, at the right time. Okay, so when all of these different factors are aligned with each other at the right time, at the correct time, then that would be your signal that now a retracement profile is about to begin. That would be your signal that now we can enter or we can have a retracement profile. And then from that point on, after having these major factors, you can temporarily shift your bias to a short-term bullish one for the time being. Okay, now this doesn't mean in any way whatsoever that you are flip-flopping your bias or you are shifting your higher time frame bias. It just means that you are reading and understanding the different layers of directional bias and you are adapting to that. Now right here, if we look at this price action on EU, you can see that 2 weeks ago we had the exact same sequence playing out. What happened 2 weeks ago is that we had recently taken out this ERL or this external range liquidity. Along with that, we also had an SMT divergence. Okay, and then this SMT divergence was followed by a 4-hour change in the state of delivery. We had a lower time frame CSD after having this SMT divergence. And all of this happened at a key time. And what I mean by a key time here is that we had just opened the new monthly candle, and I expected, based on the timing factor of the open high low close concept, that first we were going to form the high of the month at a higher time frame key level. Okay, and that idea acted as the timing aspect or the time element here. And since all of these factors were aligned right here at the correct time, I took this candle as my CRT, as my candle range, and then from that point on, for the next 2 weeks, I shifted my bias to a short-term bullish directional bias with this CRT high as my drawn liquidity. Okay, this is why despite having a weekly bearish bias, for these 2 weeks, I had a short-term bullish directional bias. And with that bullish directional bias, I took a bunch of bullish trades during these 2 weeks. And I've been transparent about my executions, and I've shown you both the losses and the wins and shown you all of my executions. Okay, so if you want to see those executions, head into my public Telegram channel and all of my trades are there and you can see them for yourself. Okay, and that continued until last Friday. What happened the Friday of last week is that we finally filled the short-term drawn liquidity because we had an SMT divergence on the daily time frame with DXY, which was also followed by a 4-hour CSD, a 4-hour change in state of delivery. And because of those two factors, along with testing this high time frame key level in the form of this rejection block, I then shifted my bias to a bearish directional bias again. And that's why this week, for this particular week, I had a bearish directional bias with my drawn liquidity being this weekly candle is low. Okay, because of all of these factors, because of us filling short-term drawn liquidity and having the SMT divergence with DXY and then having a 4-hour CSD, I then shifted my directional bias to bearish, and for this week, I primarily executed only bearish trades. Okay, now the Friday's price action which led to this short-term drawn liquidity being filled was super interesting, and I'll show you that in a bit when we drop down to the 4-hour. But that was basically what my high time frame weekly thought process was for this particular week that led me to conclude that this week we were going to have a bearish range expansion lower towards this weekly candle low. Okay, the factors were that we had an SMT, a bearish SMT divergence with DXY on the daily time frame, which was then followed by a 4-hour CSD. And because of that, I shifted my bias to bearish, and I concluded that now we've filled the short-term drawn liquidity, we can continue expanding lower. Okay, now let's look at this daily time frame and let me show you exactly what my thought process was at the beginning of the week and then how I determined my directional bias for each day of this week. Okay, so right here, first of all, what you can see is that after having the lower time frame change in the state of delivery here and forming the new weekly CRT for these 2 weeks, my directional bias was bullish and I was targeting this weekly CRT high. Okay, that was my target for this retracement profile higher. Now the reason why instead of targeting this CRT high even this week, the reason I had a bearish bias instead of targeting this CRT high is because first of all, we reached this higher time frame key level in the form of this rejection block and this daily order block. And along with that, the other major factor here was that we had an SMT divergence, a bearish SMT divergence with DXY. Right here, if you look at this DXY chart, you would see that EU took out this high, whereas DXY failed to do so. DXY failed to take out this corresponding low, and that led to this SMT divergence. And that was the second major factor there, due to which I concluded that now we filled short-term down liquidity, and now this week we can have a range expansion lower. Okay, this SMT divergence was then also followed by a 4-hour CSD. Let me show you. Now right here, if we look at this 4-hour price action, then you would see that if that last Friday, the Friday of last week, what happened is that after having this SMT divergence, we then had this CSD, this change in the state of delivery to the downside, due to which I then had a bearish directional bias for this week. Okay, so that was the thought process. Because of this SMT divergence, because of this change in the state of delivery, and because we reached this rejection block, this weekly key level, because of these factors, I had a bearish directional bias for the whole week. Okay, now let's drop down to the 4-hour time frame and let me show you and explain to you what were the thought processes that I had for each one of my trades. First of all, I'll mark out the opening and closing times for the week. Now, before I explain and show you my trades and the market context behind each one of them, before that, let me first of all break down what happened on Friday and what was the thought process that I had on Friday and why I said that the price action on Friday was interesting and how I actually dealt with it. Okay, let me explain that first to you. So you know that we had an SMT divergence with DXY on Thursday, right? Now the key thing here is that despite having this SMT divergence with DXY, I still had a bullish directional bias on Friday, and my drawn liquidity on Friday was still this weekly CRT high. Despite having the SMT, I still had the weekly CRT high as my target on Friday, and I expected Friday to reach the CRT high before having a range expansion lower. Okay, and the major reason and the major factor behind that decision on Friday was that we still didn't had any CSD to the downside, which would have confirmed the SMT. And for that reason, I still had the weekly CRT high as my target before having a range expansion lower. And that's why on Friday, during the first half of Friday, I took a bullish trade right here. We had an SMT divergence here. Okay, and along with that, I chose this candle as my CRT and I took a bullish trade there despite the SMT, because we still didn't had any CSD or any structural shift to the downside. Okay, during the first half of Friday, because of this one reason, because of this lack of CSD, I took a bullish trade here. Let me show you that trade right here on the 15-minute time frame. Right here, you can see we had this SMT divergence. We had purged the CRT low, and then we formed this order block formation, this order block, and there I took this 3-hour trade. This is a trade that I took on Friday, and you can see the execution in my Telegram channel. But then what happened is that during the New York Open, after I closed the trade, what happened is that price pushed lower and closed below this candle and had a change in the state of delivery and had a CSD. And this CSD, this bearish change in the state of delivery, finally confirmed the SMT divergence, finally validated the SMT divergence. And it confirmed to me that now we filled the short-term drawn liquidity higher, and now for the next week we can have a range expansion lower. And that's why I had a bearish directional bias for this week. Okay, and that's why I said earlier that the 4-hour price action was interesting. So now that I've cleared all of the doubts and confusions regarding the higher time frame thought process, let's get back to this week's price action, and let me walk you through the 3 trades that I personally executed this week, and let me break down the actual market context behind each one of those trades. Okay, now just to clarify, I took 4 trades this week, but I'll only be breaking down 3 of them. The one that I took on Tuesday right here, that one is a bit more nuanced, a bit more advanced, and I'm not really at liberty to discuss the logic behind that trade just yet. Okay, so I'm gonna skip that for now, but the rest of them, let's get into them. Now, before I dive into the trade breakdowns, I just want to give you a quick note. The executions for all of these 3 trades were shared inside my public Telegram channel. I've actually shared the executions there. So if you want to verify those executions, go look at my Telegram channel and you'll find every single one of these executions there. Now, the reason I share these executions inside my public Telegram channel or with you guys is because I value transparency more than anything in this career. Okay, I don't care whether it's a winning trade or a losing trade, or whether it's a winning streak or a losing streak. I will share all of it. Okay, whether it's the good, the bad, the boring, I will share every single aspect of my trading, and that's one of the core principles that I've stuck by. And that's because I know the only way to build trust with my students is by being brutally honest. And that's exactly how I've been for the past few years. Okay? So there are no filters when you're going through my posts or my videos, and I share everything as it is, and transparency is at the core of my content and the stuff I post. Okay, so you don't have to worry about any of that. Okay, now let's get into the trades. Now, the first trade that I took this week was on Monday. And since I had already established a bearish directional bias coming into the week, because we had established this new change in the state of delivery to the downside along with this SMT divergence, all I needed on Monday on the 4-hour was a proper market context in the form of a key level and a candle range to frame my execution. Now right here you can see that we had already tested this order block at the start of the day, and within this expansion swing, within this dealing range, we didn't had any unfilled key level or unfilled fair value gap above, and the only unfilled key level that we had was this order block right here. Okay, the only untested key level that we had in this case, let me show you, was this order block in the form of this candle. Now the reason this candle is an order block is because this candle filled liquidity by testing this previous order block. So this is an example of a propulsion block. On Monday, I took this candle as my order block, okay, and I took this 9 p.m. candle as my candle range, and that was the market context that I established on Monday. Okay, I identified this untested key level in the form of this propulsion block, and along with that we had this 9 p.m. candle as a CRT. And then after that point on, the only thing that I had to do was wait for my entry triggers and wait for price to reach the key level. And once price reached the key level and purged the candle range, I then went down to the 15-minute time frame. Let me show you. And right here you can see that price reached the 4-hour key level, also purge above this Asian range high, and it did all of that during the London Open session and during the 3 a.m. key time. And after that we then expanded lower and had an entry confirmation in the form of this order block being formed. What I did is I put my orders at the my entry order at the open of the order block, and my stop loss above, and I targeted a 3-hour trade. And right here you can see the price then expanded lower after testing the order block and reached the target. Okay, so that was the first trade that I executed this week. Now let's get back to the 4-hour time frame and let me show you the next trade. After that, the next trade that I took or executed this week was on Wednesday. Now on Wednesday, I had the same bearish directional buys. Along with that, if we look at the daily time frame, then you would see that we had also formed this new order block right here. Okay, and what I expected Wednesday to do is that I expected Wednesday. I expected the Wednesday's candle to test this key level, reach this order block, test this order block, form the high of the candle there, form the high of the day there, and then I expected it to expand lower from there. Okay, that was the thought process that I had for Wednesday, the Wednesday's candle. Okay, now let's get back to the 4-hour time frame and let me show you the market context that I established for my trade. Now let me show you how I established a proper market context on Wednesday on the 4-hour time frame. Okay, now first of all, you know that in order to establish a market context, the first thing that we need is a dealing range. The first thing that we need is an appropriate and a relevant dealing range on the 4-hour time frame. And after that, what we have to do is identify an appropriate key level within that dealing range. Okay, the next thing that we need is an appropriate key level within that dealing range, and along with that we also need a proper candle range, or you could say a CRT. Okay, and once we've accurately identified these three things, that basically establishes our market context on the 4-hour time frame. And then after that, the only thing that we have to do is just wait patiently for the key level to be reached and the candle range to be purged. Okay, and both of these must happen or occur at a key time. And then the only thing that is left is just to confirm the entry on the 15-minute time frame. Okay, now right here, if we look at this price action right here, then you would see that within this expansion swing, we've already tested this order block. Along with that, we've also tested this key level as well on Monday. And then on Tuesday, we had this micro expansion swing lower. Okay, on Tuesday during the New York open session, we had this micro expansion swing lower. Now the most relevant and appropriate dealing range that we had on Wednesday is this expansion swing right here. Okay, on Wednesday on the 4-hour time frame, the most appropriate and the most relevant dealing range that we had was this expansion swing. Now the reason I chose this expansion swing as my dealing range is because if we look at this price action right here, then you would see that within this price action, within this expansion swing, we don't have any unfilled or any untested key levels. And the key levels that we had were already tested before on Monday and Tuesday. And for that particular reason, after we took out this high and had this expansion swing lower on Tuesday, on Wednesday, I took this expansion swing as my dealing range. And then within this expansion swing, the key level that I selected was this rejection block in the premium region of this dealing range. Okay, now the reason I chose this rejection block in this premium region of the dealing range is because this rejection block also perfectly aligned with the daily order block. Let me show you. Let me remove all of this. Right here, if we look at this price action, then you would see that this rejection block in the premium region perfectly aligns with the daily order block. And that's why, because it aligned perfectly with the daily order block, I chose this rejection block as my key level within the premium region of this dealing range. Along with that, I also took and chose this 9 p.m. candle as my candle range, as my CRT. And during the London open session, what I did is I waited for price to purge above this candle range, reach this rejection block, and then from that point on I expected it to have an expansion lower. Okay, that was the thought process that I had on the 4 hour time frame on Wednesday. Now let's drop down to the 15-minute time frame and let me show you how I confirmed my entry there, and basically how did the logic behind my execution look like. Now right here, if we look at this price action right here, then you would see that this is the candle range high. We initially purged it during the 1 a.m. Hour before the London open session. And then after that, we also formed an order block there. But obviously, I didn't took an entry there. And the two major reasons behind that decision were pretty obvious. And the reasons are that, first of all, the timing wasn't right. Okay, right here you can see that the purge of the candle range didn't happen at a key time, and that was one of the factor that invalidated this idea. The second reason, or the second factor that we had here, is that we still hadn't yet reached the key level. Okay, this was the rejection block that I had chosen on the 4 hour time frame, and we still hadn't yet reached that high time frame key level. And because of these two major reasons, I didn't take an entry there, and that was an invalid entry for me. Okay, and then after that, you can see that right here we had another liquidity purge above, and with this liquidity purge, we finally reached the key level and tested the 4 hour rejection block, and then we had an expansion swing lower, and you can see that this happened at a key time. Then after that, we confirmed our entry in the form of this order block being formed, and then I took my entry at 3 a.m. key time at the open of this order block with my stop loss above the order block, and I targeted a 3-hour profit target, and that was a 3-hour trade. Okay, that was the second trade that I took this week, which was on Wednesday, and that was the whole thought process. Okay, now let me remove all of this, and let's get back to the 4 hour time frame, and let me show you the last trade that I took this week, which was on Friday. Okay, now regarding Thursday's transaction, I didn't trade it on Thursday, didn't took or executed any trades on Thursday, and the major reason for that is that we had an NFP release on Thursday, and obviously I don't trade during major news releases. Now I know that's a bit weird that we had an NFP on Thursday in the middle of the month, right? That usually happens at the first Friday of the month. And the major reason behind that was that the US government had been shut down for a few weeks, and it just reopened last week after Republicans and a few Democrats passed a budgeting bill. And for that reason, we had an NFP last week on Thursday in the middle of the month. Okay. Now, obviously, that's none of our concern. Okay, we don't care about any of that. The only rule that we have, which is the simplest rule that we have, is that we don't trade on major news releases. Okay, whether it's NFP, CPI, or FOMC, we don't trade on those days. Okay, then after that, the last trade that I had was on Friday. Now on Friday, I had the same bearish directional buys on the daily time frame. Okay, let me show you. On the daily time frame, I had a bearish directional buys with my drawn liquidity being lower, and along with that, we had also formed this new fair value gap on Friday. And my expectation on the daily time frame on Friday was that we're going to take out this candles high, fill the fair value gap, and then expand lower. Okay, now let's get back to the 4 hour time frame, and let me show you how I established a market context for my trade. So now obviously you know that in order to establish a market context, first of all, we need a dealing range, an appropriate and a relevant dealing range. Along with that, we need a key level and a candle range. Okay, and when we've successfully identified those three things, that basically establishes a market context on this 4 hour time frame. Now the dealing range that we had on Friday was this expansion swing right here. On Friday, I took this expansion swing as my dealing range. And then within this expansion swing, I took this high right here that we had formed on Thursday, both as my key level and is my candle range on Friday. Okay, this high right here that we had formed, I took this both as my key level in a candle range, and along with that we had also the newly formed fair value gap here. Okay, so this dealing range along with this high is a key level and this candle is a candle range that established my market context on the 4-hour time frame. Okay, and this key level in this candle range was just around the equilibrium region, and above that we had this premium region of the dealing range. Okay, and then during the London Open session on Friday, my expectations were simple. I expected price to take out this candle range high, reach the higher time frame daily fair value gap, reach the premium region, and then have an expansion lower. Okay, and then right here, once we had the purge above the candle range and once we reached the premium region, after that, then I dropped down to the 15-minute time frame to confirm my entry. Okay, now right here you can see that on the 15-minute time frame we had the patch above the candle range and we reached the premium region right at a key time. Okay, we had the candle range patch and we tested the key level and reached the premium region at a key time. You can see this is the 3 a.m. right here, the 3 a.m. Timing window, which is an extremely important key time, and we did all of those things right here at this time. Okay, so that added more significance to my entry or to my trade idea and added even more probability to this trade playing out. And after that I just waited for price to confirm an entry, and the way price confirmed an entry right here is that we closed below these two consecutive candles and formed an order block. Okay, these two consecutive candles had purged above the candle range, and when price engulfed it, we formed this order block. I placed my entry at the open of this order block with my stop loss above the order block, and I targeted a 3-hour trade. And that was the last trade that I took this week, which was on Friday.